It's Sunday, the 19th of January 2017. This is a chart update for the US dollar gold price. It's been a pretty steady performance last few weeks from gold. I think the last video I did was 3 weeks ago, and it had peaked out about this 1220 level, and I was expecting a bit of a pullback, which did come, but it was quite shallow. Few down days there, and then the uptrends resumed. The last couple of weeks, it broke through 1220 last week, which looked like a nice move, and it back tested that again this week. So I think there's some genuine indecision in the market at the moment. You can see here we've got long wicks on both the upper and lower between this 1240 and 1220 range. So I think it's market's genuinely undecided about which way it's going to go. We're still sort of in that Trump. I mean, this is the Trump presidential victory here. So we're still stuck below that 1250 level. And my sort of thesis for the last couple of months is going to be a while before we break through that. You're going to see quite a bit of sideways action. I'm not sure what the catalyst is to go higher here. Something that I've been focusing more on is probably the US dollar index chart, which is a sort of an interesting chart for a few reasons. Obviously, US dollar index is the kind of the inverse of the gold price, well, in the short term anyway. And you can see here, this is a long-term US dollar index chart. So we had this massive run up in 2014, coincided with sort of the bottoming of the gold price, I guess. And then just when Trump's won the election, we've sort of broken out of this flag pattern here about 100. But just in the last few weeks, it looks like it's starting to form a bit of a head and shoulders pattern. And I think that was a key sort of thing that for me this week was the US inflation data came out on Wednesday, I think, and it put in that big upper wick there, and it's starting to had a bit of a decline since then. And I'm really thinking this could be the starting of a top pattern. So I mean, a US dollar bull will tell you that this is a continuation pattern. So we've broken out of this long-term flag here, and we're going to repeat this move up towards sort of 120 or something. I don't really see that as likely for a few reasons, but I mean there is a sort of historical precedent, was this mid to late 1990s. So you can actually see here that this move was kind of repeated here. So the move from sort of 84 to 105. And then it had a bit of a pullback. I think this was the long-term capital management. I think that might have been related there in the late 1990s. And then it had that run up again, past that, sort of going all the way to 125. So I mean, this was a period of extreme strength in the US share market as well, which is something to consider. So I mean, I don't think we're in the same situation that we were in that late 1990s, and we know how that ended with a colossal bubble, the largest stock price bubble in history, really, in valuation terms. I mean, I've got the chart for the Dow here as well. I mean, the US dollar index is really driven by those equity prices, I guess. I mean, people need US dollars to fund purchases of US equities. But I just can't see that sort of that bull run in the late 90s and early 2000s starting again in the Dow. And this chart really is a worry for me in terms of the volumes that have come in here. So this was a sort of a long-term topping pattern, I guess, in the Dow between 99 and 2001. You kind of can't quite see it there, but I might need to adjust the scale a little bit. Yeah, so it took a while to top out before it sort of broke down. But I mean, you're talking a 40% decline there from the top roughly. But I think that just you can see the extreme volume that's come in after Trump's won the election, and that doesn't look healthy to me. I mean, I don't think that's going to break out and go to to 25,000 or whatever. But I mean, it could. It's in that blue sky sort of territory. But to me, this is a massive blow off top in US stocks. I mean, it's pretty evident that this, if you look on valuation terms, there's a few charts showing that the Dow is, more overvalued now than it has been at any time in the 20th century or the early 21st century. And the only two other times were early 2000 and 1929. The bursting of the stock market bubble in 1929 that led to the Great Depression. So those aren't things that we really want to replicate. But I think I think this is an extreme blow off top here. I mean, it could keep going for a little bit. So obviously, this is the reason I'm talking about this is I think this relates to the gold price, that if this market turns over, which I think it will this year, it could keep going for a little bit, but I don't see how this goes, a lot higher. That's going to be good for the gold price in my view. So I think as this, you might see that go back to the US dollar index chart, that I think that's going to be the turning point. When this breaks down, it'll be coincide with a weakness in US equities. So I mean, we're really sort of flirting with that. If this sort of 99 level doesn't hold, I think you go all the way back down to the bottom of this range in the next 6 months probably, and that's going to be good for gold. So that's what I'm looking at the moment. The gold price is kind of sort of stagnant at the moment, but it's really going to be driven by these other markets, being the equity market, the US equity market, and the US dollar index, and how they're interrelated.